Good morning, guys. This is Simon with Trade and Perform Coaching. This is how you get a hold of me. If you have any questions, this is the cost of the room. If you can't make $2.99 per month to cover the cost, you probably should not be in day trading, right? It's nothing specific. So this algo has nothing to do with levels, and this video has nothing to do with levels or setups regarding location. There's plenty of services that provide location. You can use those. This is specifically manually and mechanically using the process. So what I'm trying to show is how this process works on a higher time frame. Okay, so we're focused on one thing, these arrows. That's it. We're focused on these arrows, and the process is very, very direct, very, very specific. Okay, so I'm going to show you starting after 8:45 in the morning, after 8:45, and I have three requirements. This arrow down, right, has to come within the last three bars of a move up or down. That's requirement number one. Okay, requirement number two, you have to draw a line across the point of control of the bar behind the bar with the arrow. That's this bar right here. Square on it. So the arrow's here. This bar is the bar we are concerned with. Okay, so when you draw that, right? So I'm just going to do it very simply and very basic so everyone can see the setup. We trade this obviously live in the room, but this is how the setup works. Market comes down, the TMP arrow fires. If you're going to ask me what that algo is, you can save your time. We'll never tell anyone what that arrow represents, right? I won't give the formula out behind it. If you need to know it, it's all right. Just go elsewhere. I have no problem with it. So when it comes down, right, I'm going to draw a line across the point of control of this bar. Okay, when I close, so this is a 24 tick. When I close above this bar, I have the choice of three stops. Okay, the most conservative stop, the one that has the highest win rate, but not the best RR, but the highest win rate, is the swing low. My entry is one of two entries. Okay, either on the close of the bar and then add on the backside test. So your stops from a 24 tick are, okay, so your most aggressive stop, meaning the tightest stop, would be 15 points from this entry. So in this case that would be 94, just call it 95 against 80. Okay, and you'll see that one would have stopped you right to the tick, or 15 points from 90, which would have brought up 75. That's right here. And then the most conservative stop out point would be the low. Okay, 73. So I'm going to go through this again. This is the signal. The close above the point of control of the bar behind is the entry. This is a 24 tick. On a 15 tick, they're smaller. The problem is with the smaller charts, you have to work much faster, right? Now your entry. So any entry from the low to here is valid, right? So you'd want to retrace, and you'll see as we go through the day. If you use less leverage, obviously the ideal entry is just simply taking it at 94.25 and using the stop at 73. Usually that's going to end up working out to about a 21 point stop, or $400 a contract. And then the 15 point stop is going to be $300. It's 15 points, $20 a point, $300, plus whatever you use, or if you're using micros, it gets smaller. Now, let me see if I bring the mic closer, if this helps. And then finally, this mouse, of course, this is not going the way I planned. Hold on one second. There's this. There, that should work much better. And then obviously finally the using the whole area, right? So let's use the biggest stop possible to highlight this. So your entry would have been here. Your entry would have been 94.25, stop 73.50, right? And your maximum favorable excursion would have been 19,531. That's still a 94 to 31, which is almost 37 points, or 600, let's call it $700 a contract, right? So as we keep moving on, as we came up here, right, you get an arrow up, a plus sign. Okay, so I'm really just going with the arrows here. I'm not discussing the plus sign at all. The plus sign would have worked in this case. So where I needed to go below, this is on the third bar. I really hate this entry. So I can tell you in real time, I would have used this entry here. Okay, meaning this would have been my entry, this would have been my stop, because we would use the plus sign, but I don't want to convolute the signal. Let's just focus on one. So in this case, my entry's here. Excuse me. My entry's here on this bar. My stop is obviously all the way back at 31. So that's 6, 26, 25 points. And my maximum favorable excursion, right? So I'm entering here. My maximum favorable excursion brings me down to 19,482. Okay, let's erase this. I'm not going to measure the profitability and the stop of every trade. I'm just going to go through with you. It's 859. I believe there was econ. So if you're looking at the econ, what you would have done is, here's your arrow. Here's your point of control. Here's your entry. Here's your stop. Obviously, very profitable, right? You will see here, I'm just going to go through the day with y'all, right? Look how powerful this is. Arrow. Entry, no trade. Arrow. Entry, stop. Okay. No trade, no trade, no arrow. There's no arrow here. It just isn't giving us what we want. I would have substituted off to the plus sign here, but let's forget about that for a moment and just go through and focus on the arrows. Okay. If I wanted to go long, this would have been a stop. There's no question about it. Right? This is stop. So you do have to use the idea of, well, hey, where's the market going one way or another, right? But we just, the best way I have to explain this, we just wouldn't have been looking for a long. Okay, this becomes easy. I'm looking for the longs once I hit the fourth channel. That's the best way to describe it. I'm not just looking for continuous runs to the upside. So up here, I'm looking for shorts. Down here, I'm looking for longs. I favor longs over shorts, generally speaking. So the only place I would have taken a long would have been here. Right? So this is my arrow. This is my entry. Hold on. Long arrow. Entry. And obviously this is using the biggest stop. That's the stop. Right? So now as we come down, I am looking for my long here. I'm outside the fourth channel, right, below that blue line. Here's my arrow. I'm just going to draw it all with one. Here's my arrow. Here's my entry. So I'll color that green. So it's a 1-bar entry. This, by the way, this entry is the best entry, right? Hands down, it's a stuffed arrow. My stop is down here. Obviously lift to the upside. If you were looking for short, which would be totally fine, there's your arrow. Now let's erase it so you can keep up with it. Arrow stuffed. Here's the line. Here's the close below. Here's the stop. There's the push. Right? None of this hits the fourth channel. There's no arrow to trade against here. to the long side as I come into the low. So I can just tell you in real time, I would have substituted this plus sign for the arrow. You can use either one. I didn't think it would be that, it would inflect that much, it would contradict with, I didn't think it would, I thought I could do it just with the arrows, but let's just include it. So it's this plus sign, right? Here's the entry, there's the stop, there's the stop. Obviously you can see that it was profitable. If you're looking for the short up here, right? So here's the cool thing. Look at the rip to the upside. Here's your potential short entry, nothing. Look to the rip to the upside, potential short entry, nothing. Look for the rip to the upside, here's your short entry, here's your stop, there's the rip to the downside. And realistically what you would have done here is on this rip to the downside, it hit the fourth channel. So normally when I have an impulse move like that, I would draw 50-60 back, but let's just trade it as if you had no ability to make any discretion whatsoever, right? So here's the arrow down, here's the entry, here's the stop, right? Here's the arrow down, it's this bar back here. So let me erase it. All right, so you've taken a stop. So I would encourage you to find location, right? Not just to trade it blindly like anything else, but still and you can add that to part of the process. I need a 50-60 back, I need an X amount of points of rotation down. It was not designed to take every single signal. I'm showing it as every single signal, but I really want to look and go, okay, well, like from here, I'm going to go waves down, wave 1, wave 2, right? That means I'm not looking to start trading till past this point, right? So I never end up with this stop because I'm using the wave just to go wave 1, wave 2, look, right? So, and this is bringing you to the end of the day. Let me erase the lines. Okay, so as you look carefully, I think I just covered this. Here's the line, here's the entry, pushes to profitability. I'm not sure I would have looked for short there at the end of the day. If you did, here's the line. You did get 2 waves up. There's the entry, push down, and then at the end of the day, I don't have a signal for the long. It just bounces, not on the 24. Now that process, if you'll take that same process, guys, and put it on a 15, or you'll put it on a 40 tick chart, doesn't matter. That process works over and over because those arrows adjust to the size of the chart. I'm going to show you. I'll go to a bigger time frame. Okay, so I'll go to a 38, let's go to a 32 tick. Okay, bigger time frame, less noise. I don't trade this time frame, by the way, but now I'm looking much more quietly. So if I come back to 8:30, and again, you're gonna see the arrows appear. What I do in the room is I figure out which time frame we have to be on, right? So when you look over here, wow, this is really just too big for the VIX that we had. We would have ended up with, I just don't get enough setups here to use this chart. It's just too small. Here's the only setup at 1014 that makes any sense, which is this 20 control here, and there's your breakout. But the rest of this makes, your breakdown would come here. Obviously it paid, but it's such a big chart and there's not enough signals. If I take this same chart, all right, watch. I'm going to cut it to the 15 tick, obviously. Okay, now this is very, very fast. You have to be very nimble. So the 24 is obviously, for most people, is going to be your happy place. What's the reason for that? If you look, so watch as we come down into this low. We've obviously made a nice rotation lower, right? Here's your first entry. Does it lift? Yes. Is it ideal? No. Why? You're all the way at the top of the channel. So the smaller the time frame, the more tucked in you want this trade. So the way this would have worked on a 15 tick, this is your first entry. So I can tell you on a 15 tick, I use a 10-point stop, right? I don't use the swing because now you're going to the other side from the 24. You're going to a noisy chart, right? So it's entry, and it's 10 points from whatever the thing is. Usually it's 15 points. This is my next entry, so I lose, let's just say I lose 15 points here. I catch the ripper over here, right? So this is my impulse wave. In order to go short, I'd have to get underneath here, and I wouldn't be looking short anyways. You'll see that line is actually going to become support, right? Now we push to the upside. My short, right, will be a close behind here. And if I had taken that short, right, if I had taken that short from the plus sign, which again, when you look at this, right, that's a pretty big impulse move. So when you look from the bottom, this is wave 1, this is wave 2. So if you're going to try and short wave 3, I'm fine with that. But on a 15 tick chart, so this is important. That's why I want these tucked up in the top 3 bars. So I apologize, this is 4 bars back. I want it tucked up in the last 3 bars. The reason for that is explained right here. Here's the plus sign, it's obviously in the top 3 bars. My short is here. My stop is here. Now you might say, well, that's no big deal, Simon, it still stops. But it does give me time. I don't trade at New York lunch, but it does give me time to analyze the trade. I prefer the longs over the shorts when we're in bullish conditions. And clearly on that push, we're in bullish conditions. I'm really looking for the long. Let me explain that. So what I'm looking for, right, is I want the market to pull back like this, right? Like this, long here, and I clearly get paid without getting stopped out. Even if I have to take it twice, I cover the trade, right? So I'm going to come back down here. Oh, give me just 1 second, guys. I'll have to call him right back. So down here, let me finish the thought. I apologize. So as I'm coming down here, right, I'm looking for the way that the chart will play out, and I am looking at my location again. This is the opposite. This is a busy chart for the range that we're having. You have to be much more nimble. This is where I get my algo. This is the breakout, and this is the push. I would have just simply had to take it twice over here. You can see how much more work this chart is. So you'd have to be clear where you're trading. But again, this chart over here, erase all your lines. You're always going to be erasing lines, right? You can erase all this, this, this. All this goes away. Yes. So when I come over here, okay, you say, well, that's potential signal. It's got to break this on the close. This is your potential signal. Breaks it, holds the swing, super big push, right? And if you'll match that up, so this is for guys in the room, right? This is your swing. This is wave 1. This is wave 2. Wave 2 is complete now, right? See how you get the 2 bars. Wave 2 is complete. This is your arrow down. This is the bar you have to close above. Notice when it closes above, it forms a second bar. Shorts here, pushes there. That's the end of the day. Look at it from the opposite way, right? So if you come over here, here's wave 1, here's wave 2. Here's your 2 bars. Here's your arrow down. So remember, this set your 2 bars, 1, 2, completes the wave down. Here's your close above. Here's your lift. Come down, this is wave 3. Here's your 2 bars, right? Changes. You know this wave is complete. Here's the arrow. Here's the point of control. Here's the entry. There's the lift. Guys, if you can't make money with this, you're right. My process doesn't work, and you should not trade it. It's freaking awesome. Like, that's as close to mechanical as I freaking get. The only thing I'd ask is you let it stretch. Anyways, my name is Simon. Again, this is how you get a hold of me. Guys in the room, you already know how to get a hold of me. Sorry about that. And this... I'm about to go enjoy my Saturday. Here's my this is how you get a hold of me. This is the cost, $100 for the first month. You can't try out the algo and learn how it works. Well, what can I tell you? You're maybe not ready to make a lot of money, I guess. $2.99. If you can't make $2.99 a month off of this, and these things are swinging 10 to 20 points, is $200 to $400. These are all going 10 to 20 points, right? So, anyways, and you can cancel anytime. That's my 2 cents. This is how you get a hold of me.